Can you hear me?
Yeah, I can hear you. How's it going?
Pretty good. How are you doing today?
Doing good. I think I made my first trade.
Yeah. And
and it went pretty well. I think I made like I forgot how much it was. I posted in the club profits. I think it was like 600 or something like that.
nice. Let me see. Club profits. Right there, right?
Yeah.
Awesome. Cool. Well, that's how we get started with it, right? One by one, slowly ease yourself into it, right? That's great to
Yeah.
see. And I mean, what I definitely would suggest is review your trade, think about what it is that worked for you and what it is that you saw in the charts and, you know, the reason why you got in. And also, you can also look back and say, okay, well, you know, what were other signs that I could have looked at that could have kept me either in or gotten me out earlier, etc. And analyze a little bit of that, and then you can move forward. Yeah, awesome. What I wanted to do, I'll give some people a little bit of time to join, but to start off, what I pretty much want to do is review what we see in big money right now, starting from Monday. So this is Monday, the 18th, and keeping in mind as well, we went into the close last week with, you know, a couple of large, you know, big money puts, you know, this almost 10 mil 110 score, but this is taking it out for about 2 months from now. So they bought a lot of time, you know, in this, there's a lot of time that they're renting in a sense. And the strike here is actually almost 19 to 20 away. So that's actually a decent gap, right? But what, I don't know if you guys noticed, what did it kind of look like at the beginning of today or beginning of the week was we started to get some pretty bullish flow, you might notice. I see Microsoft here, 60, that's all right. Expiration date is a little bit over 2 to 3 weeks. Strike price is a little bit out of the money, but not too far out of money. $5 on this isn't terrible. So nothing major to look at there. But again, just saying that Microsoft is getting some bullish attention. Tesla here, you might have understood with today with Tesla's earnings, there was a giant pop, but we'll take a look at that too, because that didn't really hold either. But this one very likely was an earnings type of play, 1.3 mil, you know, 2K. The thing about Tesla is their contracts are generally extremely expensive, no matter what you're looking at. So, you know, earnings play, they probably profited quite a little bit from it, but we'll see from that. And we'll also have to see what it looks like tomorrow. Keep in mind, it might not hold. We'll see. This one I put in here, 109 point score. So there's $100 on there. Out of the money in terms of pretty far out of money here too. So we have the angry red here and $7 million. So a big money bag for that. Okay. They did get a little bit of time too. So we also can add in here and put in the time, the hourglass. Okay. Some IWM, you have some, you know, big money puts as well, but you know, that's been fairly common recently. And they are taking it out for about a month or so more, right? Tesla. Okay, so what I wanted to start to do is use this one. This dash or this quick means that it's probably a weekly or less than that. So that just gives us, it's a short time frame. And using that to understand here, they put almost 3 mil within, you know, a couple of minutes, you know, half an hour actually in reality. They kept buying. So there could have been good reason for it, right? And now that we see earnings and what has reacted, we kind of get a better idea of what, you know, looking back. SMH is VanEck semiconductor ETF. And so, you know, understand that they're voting on, here we go. They're voting on the CHIP Act, right? And the CHIP Act, you know, it was going to boost semiconductor production. And there was a big bet in here, 1.2 mil that came in on Monday on that side of it. Hey, how you doing, Frank? Good to see you. QQQ.
Right.
We're just looking through some of the big money since Monday. I was just pointing out SMH is a semiconductor ETF, and 113 was a pretty high score. And with the CHIP Act that was being voted on, you know, this got a little bit of a pump as well. So I'll show that today when we go into our charts. QQQ, you know, what we noticed right at the beginning of the week was that there was a lot of of green being put in, right? There's a lot of, every now and then you got one or two of these Tesla puts pretty much. This was a big one. The Take-Two, this company got a big bet against it. We'll have to take another look at that too, because that's a lot. Okay, let me write that down for us today too. I'm gonna look over TT. See what it is that they're looking at. They got it 2 months out. Score's not terribly high, but again, they're at the money, and dude, 10 mil is a lot to be spending on something like this. So maybe they know something. Maybe earnings is coming up. We'll see. Okay, IWM. We'll go through these ones a little bit quicker. SPY. So you see SPY 2.6 mil. We haven't seen too many calls for SPY coming in like this. And if you might have noticed this, starting Monday, this is where we start to see more green in our big money as well, not just these red puts. So again, here, Frank, since you just joined, what I'm trying to do now is if it's a weekly, let's try to use this, poof, very quick type of situation. Apple, somebody's bet Apple was going to go down, but this has actually gone the opposite way. Keep that in mind, right? Apple's been going up. Spot, this is in the money, so that's why it's so expensive. But they did spend a decent amount. This now is at what, 150, 153. It went up, right? So Apple, there's some bets against it. These two went the opposite direction though. QQQ, right? 7.8 mil. That's a pretty decent number. 8.2 mil. That was at the end of the day. So there's still all these bets against, on the big term, on the monthly of sorts. They're still expecting us to probably close near the bottom by the month, but or at least by next month is what this is saying. Even though we're getting this little bit of a rally, this rally that we're getting is just, it's a bear market rally. You got to keep that in mind. We're not out of the woods yet. There's just a little, nice little bounce down here. What we're doing. Tesla,
Eric,
somebody go ahead.
Can you explain the scores? I don't know behind the scores.
Yes. So the main way that you can look at it as between strike and spot, that's an expected move, right? So here with the strike being out of the money because they're doing puts, that's like a minus 100. Here, let me write the numbers out. So minus 126 and 26 cents. That's what we're aiming for, right? When you think about that. Then what you're doing there is you're dividing it by where we're at, because that's the expected percentage move, right? We're expected to go down this percentage. Now, obviously, the larger the percentage is, meaning the more out of the money that it is, Chemo has it ranked in terms of unusualness. And then it gets multiplied by the total amount of premium to give us a score anywhere from, I think he says from like 1 to the original range is supposed to be around 140, I'd say. So anytime we see that 100 or higher is usually going to be, there's a large unusual move with a large amount of money being spent, right? That's what gives us this higher score. There is a document, I'll link that into ICA graduates. It's somewhere in the Discord that we can, I'll pull up later. But there's a document that Chemo gave us that explains all of that in detail that you can read up. But essentially that's what it is it's an expected move. If it's out of the money, it gets multiplied and then it outputs a score. And so here, also the expiration date adds in another numerical factor as well, right? So the shorter the expiration date, it is essentially what our big money theory is you have the time, right? The shorter it is, the higher the score it goes, right? The longer time frame you have, the lower the score goes. Then what you have is the percentage move, whether it is, up or down, doesn't matter, right? But the further away that it is, the higher the score is. The closer it is, the lower the score is going to be. And then the amount of money that we spend, the more amount of money we spend, obviously, the higher the score goes, the less amount of, fewer dollars, lower it goes. Does that help?
Yes, thanks.
Okay, no problem. So yeah, so scores, when you think about it, anytime that does spit out anything above even 80, 90, it's already really, really high. The unusual options actually filters anything from 40 and above, right? So what I'm really looking at here is unusual of the unusual when I'm looking at 100 and above, okay? But big money also filters it in a different way. And so that's why we'll get scores a bit lower. But here's the reason. This is very far out of the money, okay? However, they bought a lot of time. And so the value of these contracts has a lot of that extrinsic value in it, even though it doesn't have any real value just yet because it's so out of the money. So the score, yeah, this might be very low, but what we're looking at is, hey, they still spent a mil over 100 points away and they bought some extra time for that, okay? So it still kind of raises your eyebrows. NVIDIA, you see all this, you see all the CHIP Act result of, hey, NVIDIA got pumped and the AMD, Intel, it was interesting. In the morning, they all dropped quite a bit and then they all recovered. Okay, but so here, let's go over these scores real quick. 109, right? Pretty far out of the money, fair amount of premium on that, right? Expiration date, okay. So, and then here was IWM, another one. This one is even shorter expiration. So you can notice it's a higher score, right? Versus the 3 mil or the 3 point, you can compare the 3.4 mil, right? So a little bit of different strike, but different time frame multiplied by the premium. And so those scores gave us over 100. So there's still this bearish expectation on the big picture. So keep that in mind. There's still a lot of big bearishness on that side. Say 9.3 mil here. XRT SPY, let's go through these. We're almost at, and then so today, what we had some bets on gold long-term. We got, what else? Even more IWM SPY. So you can see there's still a lot of these puts being taken for longer term. Okay, you guys can go through that. But then we did have these shorter term calls, right? So this is a lot shorter time frame. That's why the score is 124. Okay. So, and what has SPY been doing? SPY's been headed toward a little bit closer to 400 at this point, and this has a little bit to do with, you can notice that big money started to put a little bit more onto that bullish side there. Okay, let's continue. We'll come back into this. So there's more red expected for TTWO, so we'll look into that. There's long-term bearishness for Uber. They spent, it's a little tiny bit out of the money, but again, it's for next year, mid next year, almost a whole year of time. So that's a lot of time. So that's why it's a 46 here. This one was interesting. Remember, we saw this. Netflix came in with this big bearish bet, but the bet was for about a month out from now. The score is fairly unusual. They spent 3.5 mil, but Netflix actually did better than we expected. It popped up the other way. So that's another reminder. These aren't always going to turn out the right way. But here's one thing I want to kind of think about is they bought some extra time. So if they just bought this week's, there would be much, much more of a bearish feeling to it and then the score would pop up even higher if they spent that much, right? If they're expecting a quick move to the downside in a short-term time frame. This gives them another month still for Netflix to relax back down. So there could be a lot of other forces at play. And what they may be doing here too is they're getting in before the IV spikes for these contracts, right? Because these contracts, even though, if they were on the right side, now this could be worth a lot, but even though it's gone on the other direction, there still were more people in the Netflix, buying and selling again. And as a result, the contracts still could be fairly comparable though. So keep that in mind. We can take a look at where they're at now. Continue SQ, Netflix, right? So Netflix in the morning after the earnings report, you get all this bullish expectation as well.
Yeah, I sold Netflix yesterday for 1,300 gain. Mm-hmm. If I would have kept it, it would have been nice.
Yeah, but the thing is, you have to keep in mind the headliner was that they lost only half the expected amount of subscribers. There were an expected 2 million subscribers lost, and they only lost 900K. Like on a business setup, like that's still not good, guys. That's not a good thing. But you have to remind yourself, earnings doesn't always have to make sense. People take one side and run with it, and what ends up happening is somebody in the price situation gets trapped, and it causes this get me out situation, and it causes a domino effect of either shorts or sellers. And a lot of times you will notice, if you look at earnings, how they report it, and then what the reaction is, it doesn't always line up. So earnings is always a gamble, no matter, even if, go ahead.
What's interesting is that if I would have known that they would have lost 1 million half, I still would have gotten out. So
yeah, exactly, right? But because at the end of the day, it's still bad forward guidance. They're still losing until they show and prove that they can bring people back. This is still a negative upon moving into next quarter. Now they can spin it however they want. At the end of the day, they still got to prove that. And so the next earnings really will be judgment day when you consider it, right? And so it is it's still political. And there are companies that are very good at the politics. You can imagine Tesla. A lot of people don't want to bet against Elon because Tesla, like today, looking at the chart, there's a lot of reasons for it to go down. And right now with the report of what they did, they had pretty good numbers. It popped up, but the thing is, it's right back down to where it's at closing right now. So what happens tomorrow might not necessarily be a bullish sign still. It still could head back down from, from open tomorrow. So we'll have to see. This is always a bad sign for crypto when Coinbase gets a bunch of money bet up against it, 4.2 mil, 1.5 mil. You have to keep in mind, Coinbase makes money off trades and people trading crypto. Right now, it's not in demand. So it's very likely they're going to start losing a lot of their revenue if people aren't trading crypto to begin with. So
yeah, don't they have like back-to-back days of like double digits gain? Yeah,
so it could be a sign that ultimately they might be a situation to look into where they hit resistance and short into it, right? Or
this
your puts when they hit the
24,000 Bitcoin, right? So that might
play. Oh, by the way, I want to point out the reason Tesla also popped was because they showed that they got Bitcoin off their balance sheet. Now that Bitcoin's dropped, there's this thing where they can there's just tax wise and the way they have to report things. If they have a giant loss of it, they can kind of hide it in ways, but at this point they got rid of it. So there's no longer the worry that they're underwater and potentially anywhere from 500 mil to $1 billion underwater from the position they took in Bitcoin. So it shows that they're out of that. And so the risk from that is very likely why Tesla popped just as well, is not just due to the numbers of them doing well with the sales of Teslas overall, but also due to the fact that their balance sheet doesn't have that giant risk on there anymore. Okay. Intel was interesting. Intel dropped quite a bit, same with TSM, and then just recovered back through the gap and actually shot up before. Right at the beginning of the day, I was just like, wow, this very much turned into right away a buy the rumor, sell the news situation. But throughout the day, there was actually still some bullish momentum that came through for things like Intel, et cetera. Again, there's just a bunch of taxpayer money headed toward chip making. So, but you want to keep in mind, the money is going to go there. It still takes a lot of time for these things to develop and to build. So, how they manage the money, we'll see. I never have very good faith in how big money manages these types of things when they're given a big giant gift by the government. But give that time and we'll see what happens. And then right after you see all this, there's still bearishness, still a lot of red expected. Okay, so just keep that in mind. There's this little bump in this push right now, but overall, even big money is still saying there's still pain to come. Okay. Now, quick question. Does anybody know what's coming up next week?
Fed?
Yeah, Fed's coming up next week. So, but here's the thing with the Fed this time, there's actually more bullish reasons for the Fed right now, or at least I'll explain in a moment. All right, let's head in here real quick. So last week we saw this candle right here, right? Last week we saw this big, let me circle him. We saw this guy right here, okay? So remember with this situation, it's pushing upward, you might imagine. And what did we get today or this week so far? We've got a push upward, okay? Do you find it surprising that we've stalled off right here at this previous gap that we've had? Let me zoom in into my daily. Keep in mind, this is a weekly channel, weekly picture. All I want to point out right now is push up, push up, push up, push up, but what's happening to the green volume here, guys? I know we still have another day and a half, 2 days to go. We still have Thursday, Friday for this candle to fully form, but we still need to show that there's really actual buying pressure headed up. Otherwise, what does that mean? We're just running and buyers are exhausting themselves right now. So we very likely in the upcoming week could come at least to retest this little gap in between that, or not gap, but this little area that we now are potentially bouncing back down towards. So let's go ahead and zoom in just a little bit so we can see this more clearly. Let's pull up my daily. We'll go in closer afterwards. Now, my previous prediction was just a little bit off, right? I was thinking we just bounce off of the top of this channel. We did technically, if you go a little bit closer, we did have a quick little relief of it. So if I go to like the 2 hour, my expectation was here from last week was we would go up and then bounce down further. We didn't go quite as far down and then we just kept going up. So I got the first bounce part right. I didn't really update past that, but then we did start to reverse back up. So now actually we're bouncing right here. You might imagine we already have a little bit of slowdown up here. And let's actually pull up additional of our, let's pull up our other things here. Okay, so you gotta kind of notice here, we are very highly overextended, and when we do come up here, we generally do have a form of relief. So we will have a bit of a relief at this point. 2 hour, even if you go up here, your 4 hour, you're getting really high up there too. Your daily isn't quite too high, okay? But I want to point out here with the daily though, you on the top side over here have been going higher, and then these are starting to show a little bit of curling. So if they do curl down, they could bounce back down, all right? Now, this one, or the RSI, is the one that's a little less certain, because RSI here is showing that we're headed into a little bit of bullish territory, but we're not fully there yet. This yellow line needs to also head back up here too. That could give us a higher, relief and back through the gap, right? But there's additional signs and hidden signs that actually show that that might not necessarily happen. One of them is the VIX right here. Well, I want to show you with the VIX, because think of it too. We also have exhaustion of those buyers near the top right there. What happened with the VIX today? The VIX did peak its little butt below here, right? So you did get a little bit of relief underneath the 24 range, okay? Because previously that high 23, low 24 range was pretty much acting as resistance, okay? Let me go give you a bigger picture too. If you go back and just follow where the VIX is right now, this red line, it's previously acted as a bit of resistances and supports in the past too. So, like I was saying too, the bottom upward trend, you still have a little bit of room for the markets to pop up again, right? Because downward on the VIX means we have a smaller standard deviation, but less fear. And as a result, we still have a little bit of upward we could potentially go. But this candle right here is showing we're stalling out again. And also, if you notice with our indicators as well, we haven't broken down below that either, okay? So like right here, notice that this isn't exactly below it yet either, all right? And so just see how here, if we do have this bounce back up, that just means our markets are going to expect some more red again. All right, we're going to bounce off of that. Remember, so we're just going to bounce off of that in terms of SPY is if we do get the same bounce off of the bottom here. And we've done that multiple times now, right? So do we get another bounce, or do we get a relaxation down and we actually get a rally for the markets? Well, that also has a little bit to do with what our Fed's going to do next week, right? So far, the Fed has continuously said, we have to raise the interest rates in accordance with what inflation is telling us. So there was a little bit of expectation, hey, we might get that, 75, is the expectation, but could we get potentially a full point? Or do they get scared or think things are good enough and they're going to give us 50? Well, so what are the reasons for all of them? This one saying inflation's too high, we need to combat it now. This is what every consumer probably will tell you right now. Inflation's getting out of whack, guys. Things are costing way more than they should. And this is not sustainable over the long term. So we really got to whack inflation in the head and really combat it with these blunt tools that we have, which is just raising interest rate. It's just going to lower demand and it's going to start to even some stuff out. But the expectation has always been this, because we don't want to go too aggressive and we didn't want to go too relaxed. And this was kind of this, sweet spot for the longest time. All right, for up from the last meeting at least. Then what ended up happening was we did have our CPI readings, and our CPI readings actually showed that numbers have gone up. We're in the 9%, right? Okay, and PPI has gone up too. And as a result, you have to keep in mind, the markets have essentially priced in this 75. They're expecting that. So there's this, more so this than this. You got to keep in mind, more 75 than 50. And so the question here now is that even if we do get 75, there could be a rally, because they're doing what we expected. We already priced it in. Now it's just go on with our day moving forward. Otherwise, what could potentially also happen is if they go with a little bit less, we could get a bigger rally. We could get less fear, etc. But you got to keep in mind too, this means that things are going to keep going up in price, and they're actually just doing it for the political reasons to prop up the markets, because that's what their intention is here. All right. So you and I actually want this. This is normal. This is what was already expected. But if this happens, we could get a bigger rally than we expect. That could be the short covering rally, because nobody was really thinking this might happen. Okay. So I do want to point that out, that when the Fed does, finally come up with what their plan is and let us know, nobody really knows what direction they're going to go with this right now, because there's a political way to play this. There's the economic way to play this, right? And unfortunately, as much as the Fed is an economic tool for us, they have a lot of political hands in their pocket moving along. So as a result, it's hard to say what exactly might happen, right? We also will have GDP reports and things like that. So there are certain things that will be hard to hide in terms of the numbers. If production and demand and all that kind of stuff really are struggling in our economy, they will start to show, right? And so here I do want to point out, we do very potentially have some sort of downward relief, at least for a little bit. It can retest this and head further down, or if it breaks, then we could potentially see headed back up towards some of these higher ones, and that could be another market dump. So keep that in mind. That's one of the dangers to look out for if we do suddenly have a VIX spike, because we are feeling less fearful now, right? If you might have noticed with the numbers, especially with SPY, they're starting to become more relaxed. I've been trying to post them every single day with the fear and the greed. And right now where we're at is about a 40, right? We're at a 39 now, okay? And so we could head further down if we don't close this gap that we have, right? And we do have a little bit of this bearishness starting to show, okay? Fed meeting is going to be on the 27th is what is supposed to happen. So keep that in mind, next week, 27th, exactly next Wednesday, exactly a week from now. And I can tell you up to that point, there probably will be a bit of a sell-off up into it, unless there is reason for people to continue to buy in, right? Because if they're going to raise interest rates, the overall market itself is going to want to go down. So keep that in mind. Up in the interest rate, no matter what, should have a downward pressure. When the number of what exactly we get comes out, then we adjust to that. But right now the expectation is 0.75, right? So keep that in mind, guys. All right. Any questions on SPY here? Okay. Actually, let's go into Apple right now, right here. All I did was I pulled up Apple, and I kind of want to give you guys this this look here. So here what I have is the weekly. I can pull up the daily as well, because what I have in my Bollinger Bands and my moving average lines, you can see here are your yellow, green, and blue. Okay, so yellow is going to be your 50, green is going to be your 100, blue is going to be your 200. I have them written up here too. So 50 moving average, 100 moving average, and then 200 moving average. So you can imagine the 200-day moving average is really that long-term support. But let me actually do that. Let's pull out onto the weekly, because Apple's been around long enough where you have 200 weeks to use. Look at this, how beautiful this is. The blue line, aside from this, you know, the financial crisis, right? Aside from that situation, the blue line, the 200-week moving average, will act as this support every point along the way here. Do you see that? Now it's when it breaks down below, obviously there will be, you know, hurt and pain, just like the GFC there. But also moving up, we also have the 50 and the 100 that get respected to a certain extent too. However, it is when we go look at this and you have it break down below not only the 50, but also if you break down below the 100. So if I were to use these 3 points from the past as examples, breaking down 1, 2, and then finding your support, right? Breaking down 1, then breaking down 2. So breaking down, bouncing off this, right? Because keep in mind, this is on a weekly. That week it went down here and then it bounced right back up, okay? And then it headed down toward the blue line and it bounced off the blue line here. So break 1, break 2, right? This was the pandemic. Now, I want to be clear here. If you look at this situation right here, you can imagine, let me just draw it out for you guys. You got the yellow line, right? And you have the first breakdown below it where you touch the green line, right? Touch the green line. From the green line, you usually bounce, right? Because you have the first level of support, retest it, right? Bounce and retest before you break down below, test the blue line, and then find movement up, okay? That's essentially what's going on there. Let me show you where we're at right now. This is the weekly, right? Big marbles, big marble jar. How many people are dealing with this right now? Well, do you see how we broke down below the 50 on the 50 week? What are we doing right now? What I expect right now is we're very likely going to come back up to this, tap that, and come back down to this. That's going to be our first move, most likely, okay? Because this 50 moving right now, because we're in this bearish movement, that's going to be the next significant support where people will look to potentially sell and get out of their situations, especially because this 50 is really starting to curl too, which ultimately does create, right? Do you see how it's like flat, but there's more than likely going to be some sort of exhaustion back down toward this. We still have a large gap here, okay? And they always want to start to close off, get a little bit smaller. The gap between them gets a little bit smaller before they expand again. Right now, the gaps between them are very, very big. So they're going to relax more. They have a better chance of relaxing than expanding their channel right now, guys. Keep that in mind, okay? What else do I want to point out with this was our volume. Again, with the weekly volume, just like with SPY, yes, we have this nice little rally going on, but the volume down below is extremely low, right? So this week's is extremely low. And even so, when you take a look down here, you know, we're not peaking up very high, okay? And so that's still showing that there very likely will be exhaustion of these buyers sooner or later. Now let's look at our daily right here. It's still the same numbers in terms of 50-day moving average, 100-day moving average, and my 200-day moving average. Well, what do I see right now? We do have our 50 crossing our 200 right here was our death cross. Keep that in mind. Death cross just happened for Apple, you know? And so, yeah, we rallied back up to this situation. Yeah, we're just dealing with this volume block, but who's to say this doesn't just revert further down right now? So I want you to be careful with, you know, with Apple. Yes, their earnings, yes, their guidance could be good, right? But they still have to deal with the effects of the entire economy moving forward. And so far, with a lot of indicators, the economy is slowing down with the things that we're doing. With the interest rate raises, that's going to slow down demand even further. It's going to hurt a lot of these big tech companies too. So, you know, will that be taken effect and potentially just reject off of one of these previous lines, there's a pretty good probability for that, especially as we see our volume for buyers is getting exhausted with such a quick move back up, okay? Now, I do want to do this too. Let's go ahead and involve Mr. Fibonacci, Mr. Golden Ratio, and let's just take a look from this big move down, right? From this big move down, where are we now? Do you see how the 0.5 is right there, guys? So we will encounter resistance, and we will encounter a bounce back down at that 154, 155 level right here, just because that's the 0.5 moving down. Now you can even still say, well, Eric, how about the full move? Okay, the full move will give you up to almost 156. That's just a little bit above the moving average, right? The moving average is going to act, it did kind of already act as resistance, but I feel like it's still going to give you a little bit more trouble. Yes, and then you have this value, you know, previous bottoms and tops here. And so you have a lot to fight through if Apple's going to go up higher. So for my prediction, we could have a little bit higher, but in reality, maybe this, right? So somewhere in there is what I would look at, because, right, here's another part here. Our slow stochastic right here has a very small, I mean, it is a little bit, a small divergence in terms of bearish divergence, okay? It's not necessarily completely confirmed yet though. So if it did turn away, then yes, I probably would expect it to come back into this channel further and harder, okay? Any questions about Apple, you guys? Tesla, I had this done last week. I forgot if it was for the ICA class or for you guys for the charting. But what I pretty much did was I did a strat. If it breaks up above this level, it goes, you go up. If it breaks down below this level, you can take it to the downside. What you kind of just, you know, I'm not going to play Tesla myself just because the premiums are way too crazy, and I still don't understand why it's 100 forward PE ratio. So, but if you can take a look here, yes, it did pop after hours. But what I want to point out though is that pop after hours came straight back down, and it's still sitting back where it is in terms of just almost right near the closing price. So yeah, we'll see what ends up happening tomorrow. This does mean, you know, with Chemo's day trading strategy, that your pre-market high and pre-market low could be considered from these situations, but we'll also have to see what pre-market itself actually creates in terms of price resistances. Will Tesla continue to go up? We'll see, right? The results from here, like I said, a big part of it was the Bitcoin situation and getting themselves out of that. They still do have a good amount of demand for their vehicles, and it seems like what had gone on with the lockdowns in China didn't end up creating as much turmoil with their, you know, with their revenue and with the way that they were able to operate. So, you know, moving forward, it's very hard to say exactly, but let's go into, I'm going to pull off this. How you doing, Chris? So if you were to just look at this, right, that flag coming down is, this is an ugly looking bear flag. But again, earnings, like I said, is a toss up. We did come back up to the top part of this channel, right? Attacked it a little bit, but then it relieved itself. So it's still not out of that formation completely. You got to keep in mind, we're still in this flag. In terms of before earnings though, it was a very bearish setup. You got to keep that in mind. We're at this resistance and we're at, and right at it. So the rejection could be very, very hard if it did miss their earnings. So what you're going to be looking for though, is if we do break up above it and retest and show bullishness, that's what you'll be looking for. Otherwise, if it breaks back down into the channel, you got to understand that that just means there's an expanded portion of this channel, and it's just still going to consolidate in there until there's other reason to break out. Okay. Now, since Mr. Mr. Cut It Up is here with us today. I invited him because you guys have been, I hope you guys have been following him in his channel. He's done a great job in helping you guys, look at the strat setups, right? And you can look at this in terms of, I'm sure with his eyes and, the ultimate final view of these doesn't just come down to what they're showing you when you label the assistant for it, but you can think of it as like you have big candles in which you have smaller consolidations inside, and then breaking upward or breaking downward now gives you bigger moments and bigger movements to look at. But what I really think Chris does a great job at is really getting your guys' eyes onto multi-time frame analysis. Okay, just for the example in this, the Strat Assistant does have a little bit of that. When you go into something like a smaller time frame, on the right side of it, oh, this one's way too small. Oh, it's so tiny right there. Let me zoom in for you guys. But there's this whole list that tells you what the expectations of your upcoming candles are going to be. So it's all zoomed in right there. Let me get it into a better view. The bearish reversal, it'll call it out for you. It'll call it out if it's an inside or outside candle. Stretch this out, see if it'll be easier to see. That's a little bit better. Okay, there we go. Okay. So like right now, you might see that Tesla is showing an inside candle for the quarterly, for the monthly, for the weekly. The daily is now a 2 up, so it doesn't have the in, meaning a 1. The 4 is still an inside candle, but then here on the hourly, the 30-minute and the 15-minute, we're showing downward movements. Do you see that? So this is a situation that really does help us with, a quick view of what's going on, right? And Chris does a great job of telling you, hey, we just broke this, we're now in a 2 down, or we just broke this and now we're a 2 up. So in this 3, 2, 1 means we can play this or we can play that. I want you to, if you don't have his account, his channel set for alerts, and if you're doing the strat, you better have his stuff ready and keep an eye on what he's doing. Because again, the dude just quit his day job to do this full time with you guys. Okay, so understand. Yeah, go for it, Chris. You could talk all you want.
What up?
Yeah.
What's up, y'all?
Go for it.
But
yeah, anything you want to add? Yeah.
I was gonna add. So like the month, the higher time frames, you always want to keep those in mind. The month and the quarter. But the way I really trade a lot is kind of bi-weekly, day trading, etc. So a lot of things that I'm looking at is the weekly setup. I want to see. Usually I'll go to the week, see. So like let's say Nvidia. You can go to Nvidia this week. This is what I don't know if I posted this in the Discord charts, but if you just go to the weekly on Nvidia, I'm pretty sure it was a 3-2-1-2. Pretty sure it was Nvidia. Yeah, so right there. So if you see the 3-2-1-2 setup on the week, once we get that, so a 2-1-2 is an actionable signal as well. That's like a strat setup. So with a 3-bar right there too, that's another target that you can or another price point that you can target. So when you see the 2-1-2 trigger on the week, that tells me that going into this week or this week now, we have our trigger. We know where our weekly target is at. So now we trickle down to the day, and maybe like say the 4-hour or the hour. And since we're trading, we're kind of trading daily timeframes, we go off of what those smaller timeframes are kind of showing us to determine where we're getting in the trade, where we may get out of a trade. So what is this right here? The 4-hour.
Mm-hmm.
All right. I think the 2-1-2 trigger is right. You see that 3-bar right in the middle, the left, the one right in the middle. To your right. To your right. No. Damn, you're like touching all of them. Except to the left, one more, and one more.
This one.
One more left. One more left.
This one.
Yeah, that one right there. I'm pretty sure right there is where that inside bar is at, the top of the inside bar. And so once we saw Monday, we gapped up. So that was kind of hard to gauge. And then Tuesday, yesterday, that was kind of like a TTO, which is basically just a retest. They just Strat refers to it as the TTO. And then today we get that next two up, and then that already triggered the week, which then put the weekly 212. We know that's moving in force. So now in the daily time frame, I trickled down to like the hour, the 30, and the other time frames to kind of gauge some levels to go off of. And then with all this, then you got to be kind of like, you kind of got to know what contracts to kind of look at too, because even though we know where the target is at, like say we know it's going to, I think the target was like 175 or some around there. But once we know where the target is at, just because we know it's going to get there by the end of the week doesn't mean you should be buying weekly contracts. Just because that two right there, that red two, that TTO, I know a lot of those guys in the option flow, their contracts got eaten up when they were buying in on Monday after that gap up.
Mm-hmm.
So then that's just something to kind of keep in mind too when you're picking contracts and whatnot. But then that's how I gauged a lot of my plays this week. There's a lot of like 3-1-2s, 2-1-2s on the weekly time frames and all those things. Like Shop did the same thing.
Mm-hmm.
Shop had the same exact setup. And then that's really how I gauge the strat.
Yeah, let me add on to that as well a little bit. When he says moving in force, that's essentially just there's a big candle, there's a big movement with a lot of buyers or a lot of sellers that in that situation also is breaking through previous supply and previous groups of people that are sitting there. When you have something like that, you really see how you've got the effort and you've got the result of it, and you've now broken up into a different price channel. So yeah, Shopify here, man, Shopify used to be so expensive.
on the week, it's pretty, I mean, everything's pretty
right. You see how big those candles are though relative to everything else, right? So you're looking at again, it's not just what the price is, it's the effort, the result. You see how little effort this gave to such a big result too as well, meaning that as well the bears have actually taken a step back somewhere, right? They've let up a little bit when you look at that. But yeah, Shopify, when you take a look at this, had the 3, 2, 1, and then the 2, right? So the idea here is that the trigger doesn't happen until we break the 1, right?
Yeah.
And once it breaks that, then you can get in. And what are the targets you're aiming for? Remember, we want something to end up in the money. That's the ultimate goal, right? Out the money, becoming in the money is great, but those are a gamble, right? So you aim for something close to the money, in the money, at the money, that becomes in the money. So in this situation, let's talk about this, for example. So the break here above 35, right? What were the first targets you would aim for? You have a target here, and then you have this target here, right? And then this target here, right? And so those give you 3 targets to aim for. What would be a good contract for you to look at? Well, so here, breaking up above this, here is this 36. So a 36 contract, 36 call would be nice to go past that and then take the profit when it gets close to that 36.70, 36.60, right? Then you also have, if you buy enough contracts, you could potentially play it up to the next level too, right? Get out of half of them when that happens, and then get on, start to get yourself out of the rest of them. Or you could do a second play because very likely in this too, you came back and retested or went down, had a little bit of relief. And when it breaks up again, you could take it toward the next level, maybe get into the 38 Cs or even the 37 Cs, right? But you wouldn't want to aim for anything up here. You wouldn't want the 42s, right? You don't want the 45s. Those would take more weeks or more days for you to get there. So again, those prices are much further away for you to target. So don't aim for these targets, but aim for the most recent close ones that you have, because it's more so guaranteed. Somebody from the last couple of weeks is still around, right? That makes sense?
Yep. I was just say too, adding on to that is knowing how the stock moves on a daily basis. So, you know, I was looking at the 36 Cs last night because Shop only moves maybe $2 a day on average. I'll give it $2. So from that 212, I was just gonna take it to that first target, whether you read the high of that 2 before the 1.
Mm-hmm. This one.
That one right there, yeah. And that's a larger than average daily move in itself from where it was. So those 36, those would have ended in the money today. But then the move that Shop did today, it moved like $4, I think, 10%, something like that.
Yeah, look at this candle here, guys.
Yeah, so those contracts, because of that unusual movement, everything shot up, like the IB, the everything on the contracts appreciated hella crazy. That's why these contracts, they went like 400%, I think, somewhere around there. And a bunch of stuff was doing that today too. The market was moving pretty aggressive.
You know something here, guys? Let me pull this out a little bit. I think Shopify might be going through accumulation now, guys. The volume here is actually starting to pique some interest, wouldn't you say? Wouldn't you say there's actually, I mean, there's still a lot of sellers involved in here, but the first buyers bought right here at 35 or so. Yes, it dropped to like 30s, low 30s, but you've got big buyer here, big buyer here. Volume is dying is the only thing. So that gives me a thought that we still could come down toward these levels. But this right here, if we do break back above, we could still break out of this little channel for it. What I was looking at here, it has a little bit of an accumulation look to it, where you could say you have selling climax, you have some retests, you do have some buyers, you have it keep coming down and then it keeps getting pushed back up. And now this, so what I would say with Shopify is if it breaks out of this previous channel, look and see how it retests that previous top. If we do have a breakup above, there could be a sign of strength, because this right here could be our first initial sign of strength for a last point of supply headed up. So keep an eye on Shopify. I would put a little alert for if it does break up further for there, that we could have that. But just all as well, it very well could do something like that, come back up to this level and break back down into the channel. So be aware of that. There is a potential with this big candle though, we could break up above with a little bit of a, like with what Chris is with force. And that could be a sign of strength moving forward. So keep that in mind, all right? Here, I know I had this one up. Do you have anything else you wanted to add? I was gonna go into TTWO because we saw a 10.2 mil print on this the other day. Take Two Interactive.
I got regular. I did some charting earlier, like Excel. I was looking at healthcare names. Healthcare names look kind of weak.
Okay.
Today with everything being big green, pretty much all of healthcare was pretty red. Some of them, like PFE, has a nice
Pfizer. Mm-hmm.
Yeah, Pfizer has a 311 set up right now on the week. I think it is on the week.
Here, let me pull up Pfizer. Let me do this one
Oh,
real
no,
quick.
not the week, not the week.
Let me do this one real quick, and
Oh,
I'll
yeah,
pull up
yeah,
Pfizer
go ahead.
with you. Take Two Interactive Software. We saw a $10.2 million put on this. I have a feeling they might know something about earnings coming up. Still very likely we come back up and tap this 100-day moving average, I would say. But this move down has a lot of this is a very bearish move right here. This could have just been some profits that got taken, and it's just kind of trading in a higher range right now. Shoot, from the whole move down, or you could say second move down, even just this guy all the way to the bottom, he's already retraced back to the 0.5. He's just sitting at the 0.5, right? And you could kind of consider what it looks like on these other ones too. But in terms of the quick move off of the most recent bounce off this 50, you're just sitting at the 0.5. Overall, okay, let's take a look at, PE ratios and stuff like that. 35 for PE ratio, still pretty high, right? 20 bill market capitalization. Let me actually double check real quick. Do they make money? I think they make money. Their earnings have all been good. Quarterly, okay. Profit margin, oh, not bad. Company itself is decent, pretty solid in terms of bringing in money, earnings, etc. They're not terrible. So, why would somebody be betting 10 mil against this? The chart itself does show and say that there very potentially could still be lower to go, because it already has involved these lower values. So if it bounces off this 0.5, you definitely could head back down for this 123 range as well. So take two. I do think that $1 million or $10 million there, I feel somebody knows something about, probably they're not going to do too well in earnings or something. We'll come back to this when, after earnings does report and stuff. But yeah, 10.2 mil is quite a bit for something like this. All right. We'll look at Pfizer. So Chris, you said weekly, we have our Pfizer. Let's pull up the Strat Assistant first. We're all the way up here. The 50 week has been pulled up with us here. It's still headed up. Okay, so we have the inside bar right now, right, for the week at least so far. So you do have the 311 right now is what's going on, right?
Yeah.
So that's the weekly. Weekly, we have quarterly, monthly, weekly, all inside bars. You see that? So we don't take action until it breaks up or down of this previous one here, right?
Yeah, for the week, that's what I'm looking for. And then if we can move, like there's a lot of pivots to take out right there to the downside.
Mm-hmm.
For sure.
So what he means by pivots here is just that there's these situations where you have a quick move up, but when you come back down to it, each one of these now becomes a target for us coming down to. And it's called the pivot machine gun, PMG.
Machine gun.
When you hear PMG, guys, you better open up your eyes and listen. All right. PMG is a situation where you have a direction to go, and if you could just take out levels like a machine gun. So 1, 2, 3, 4 of these levels in terms of this, and you can even imagine it. It could be the body, or it could also be the bottom of the wick. Everybody, the strat has a lot of different ways that you can look at that, but ultimately the body could just ultimately be a different time frames target for you to aim for. But yeah, there's a lot of if it does break down below this, then it's headed down to target these other values, you guys. Okay, so if you see PMG, go take a look at your chart and see if there's just a fall down, there's a lot of profits to be had through those different levels. Okay.
Yeah.
Anything else you guys want us to take a look at? Let's see. Oh, I had SMH also because I want to take a look at how the chips all reacted to the bill, right?
Yeah. I had charted Soxel the other day.
SOXL. Mm-hmm.
Yeah, that was looking pretty good.
Now, I want to also point out that there's a lot of this starting to form in our Elliott wave, where we have a 1, 2, 3, 4, 5. You can actually see that a lot of these have a 1, 2. We very likely could have a 3, 4, and then a potential 5. So keep that in mind. Now, also be aware though, it could cut itself short if we're on the downward, and this is actually just the ABC correction coming backwards before we head down. So there on this one, if we do have continuation with it, still could head further up, right? With the CHIP Act and all this. What's nice to see, and the reason for it is you do have increasing volume, right? We always talk about decreasing volume. You're getting more and more buyers coming in that are pushing this up higher. You have the bullish continuation on the daily, right? And chips overall just got a bunch of attention and should get a bunch of money flowing into it. So there still could be a last leg moving up. It hasn't had its real retracement. Oh, let's actually take a quick look. Let's see if it says anything on the 1 hour. Okay, you could argue here that we already had the full movement, guys. Okay, 1, 2, 3. Let me move these guys down. 4, 5. Okay, so 4 didn't come back down below the top of 1 either. So that's actually a legitimate Elliott wave move, because also you have this is a longer correction. This is your sharp correction. Remember, 1, 2, and 4, each one or the other. And then so this last top up here is just wave 5. Oh, that's not what I wanted to do. So wave 5. Okay, so if that's the situation, if we're at some real good resistance here, that just means we're primed for a little bit of a relief rally. And that looks like it's about to happen, you guys, with chips. Do you see that? Okay, some divergence on the hourly. It's hit the top again. It needs to breathe a little bit. So, you know, we could very quickly see at least the A, B, C type of correction back down toward the top of 3 or 4 here. Okay, that's what I would look for in terms of this, because again, the chips bill and all that stuff, it's robbing us taxpayers, but at the end of the day, money is going there, right? Okay.
I gotta dip out, bro.
All right. Thanks for joining us. I appreciate it. Always good to have you. I'll be trying to do this on Wednesdays, and probably Sundays is the other day. I'll keep everybody in the loop about that. But again, thank you very much, Chris. I appreciate you. Good. I hope everybody profits from all this, right?
Thanks, Leonard. Appreciate
No problem. We will continue to chat. I'll do this again next week or later in the weekend, and then we'll do this again. This week I had an earlier class, so that's why I was able to do this at 6:30 today. We may have to aim for a little bit later in the night on next Wednesday, depending on when the class gets scheduled for. But overall, keep me in the loop. Let me know how your trades are going. Talk to me. Let me know what it is that you've experienced or what you want me to chart out, and we'll just keep in touch. We'll keep things going and continue this process of learning. I want to start to introduce a little bit more of Wyckoff during these, and start to talk and just do more of the Elliott wave charting and giving you guys those views, so that at the end of the day, you can be a little bit more confident in your charts and what you're seeing too. Take back the time that you want, right? Take back the time from the man, so you can do what you want to do with your life. All right. Cool. If you have other things that you want me to chart, I could do that. Otherwise, you guys are free to get going.
Hey, just one last one. How about Polestar?
Oh yeah. Okay, this is the hourly. We do have a tiny little bit of divergence starting to form here. We're kind of clustering ourselves, and things are starting to peak up a tiny little bit. Let's look at what our daily says. The only thing I don't love is the fact that we're still below these previous levels right now. So we're still down here. But these indicators all here show that we are headed at least toward the bottom, right? We're still right here though. So we're still, until it has reason, it still hasn't broken back up above what, 86, 986 right here. That's kind of the shelf that we're sitting at, right? So until that happens, it's hard to say what exactly might happen with it right now. Earnings, etc. We don't have anything necessarily coming up right away. So you'll have to, it is a situation where I definitely would say the news could push it around and give it more. Let's see. Yeah. No real divergences forming. Let's go bigger picture if there's anything here. In terms of buyers, there are some, but not a ton. And there are probably a lot that are trapped up here as well when you look at that, right? That big candle. So Polestar, we're gonna have to make sure, we got to get over that 970 something range before we can really have any real bullish move. Right now, we're still trading right underneath it. So that's really currently acting as a bit of resistance where we're not breaking up above it. Now, the moving averages, though, have some curling to them. They are squeezing together. So it's showing that the price, right? You can notice here, the price is starting to triangulate in this little bit of a wedge. So I could see it breaking up above and retesting and then maybe headed toward these levels, but it still has quite a bit to break through because you do have all of these people, right? You have all those people who are still down below. But again, that's like 50 cents. Who knows? Some good news, some good earnings, some good reports very easily could push this around. The company itself, I've been taking a little bit more of a look on Twitter and other things as well. And overall, the company seems to have some really good things going for it. Just again, the price action right now is going to be subject to how people view the economies, and what's happening with the economy too. Your 2 out, right? If you notice, there's a lot of things that are curling. That's the thing is there is bullish hope for it, but as of right now too, I can't necessarily give you a reason as to why this would go up above 10 yet, right? There has to be a reason for the company to push up above that. If we take a look into their numbers, right, there's still no real earnings. The company itself is starting to show some income, which is the good side of things, right? But overall, it's still kind of early to, the company itself still needs time. So that's the only hard part about this is how the future treats Polestar. We don't know. And right now, it just seems like nobody's necessarily going to be willing to pay $10 or above it right now. This green line and now, right, our yellow line on our daily, our 50-day moving average is going to currently act as resistance. So notice how this line, this is just going to creep down here probably, and we're probably just going to continue to bounce off of it until there's reason for us to break above or to break below.
Okay.
Yeah. Overall, there's long term, no reason why you would get out of it. But as of right now, with just price action, it's struggling right here.
Yeah.
It keeps
Yeah.
going
So
down.
here's my problem, and I'm a long-term investor, so I really don't care. But being in options, I'm a rookie, so I've been making mistakes. So I let Friday, my contracts, I had 100 contracts, and I let it expire, and I didn't pay attention to it, and it got filled.
Okay.
So I'm sitting on like 16,000 shares now.
Okay.
So
At what? So on last week, so it was at that $10 mark, right?
it got filled. Yeah, it was at 10. So it got filled, but I had a bunch closer to 9. So I don't know what my average is. It's like probably like 950 or something like
Okay.
that.
Yeah, what your break even necessarily was.
Yeah, correct. So I'm a long-term investor, so I really don't care, but it's just a lot of money sitting on one company.
Yes.
Yeah.
Yes.
So I see, my thing is that I just thought it would expire worthless and it wouldn't get filled, and it got filled.
Well, because you were in the money, right? And the money still has the X, right? You can check it off and say, I don't want to purchase it, or just get rid of the contract before that expiration date to avoid all of that headache too.
I was just gonna let it expire worthless because I thought it wouldn't get filled, and it got filled. So
yeah.
So anyhow, that's I think one of my critiques for your ICA class is just the order management part. Because as a new options guy, I didn't know, and I made some mistakes, and I hit some 0 days to expiration by accident. Just not being careful. So that's bad on me. But I think if you dedicate a segment to just order management and execution, because
what the risks are behind those situations, because I've started to notice after these couple months of it, there's these tiny little corners that I realize, okay, we definitely need to make sure that gets added in there. And I'm glad that you brought that up, because again, until those situations happen, we don't really think about them as like, oh shoot, like that was something we didn't necessarily go over. The whole buy to order situation was another one. And then the good faith violation is another one as well. Correct. So I definitely need to make sure we add those back in. And I appreciate that you bring those up with me, because I would have brought that right up to my mind as well, because again, for a lot of us dealing with these options, it's like, we didn't get to that point, or we knew we weren't going to have them filled because either they were out of the money type of situations. But now that that's happening,
but a rookie, we just don't think about stuff like that. You know? Thought they would expire worthless and be gone. It's a write-off. And then they got filled. I'm like, well, I'm sitting on a lot of Polestar now.
Well, on this though, I will say you do have this double bottom that is already formed with enough investors down here that it very likely, if it comes back down, will be bouncing, right? And you are starting to run out of sellers too. If you notice, the sellers that are here, there's very low volume down here, so it's starting to trickle back around and potentially still has upward movement. But you just have to remember that $10-ish range and stuff; those could act as resistances that prevent you from going much higher. So just keep that in mind.
Like I said, I'm long term, so I'm not that afraid. It's just, just cash that I'm not going to be using, so it's okay.
And also keep in mind, it's much better you're here and not where the other people necessarily purchased
at 13 or
less, right? much higher of that sort.
Exactly.
You're in a much better position for the upcoming future, with a lot of the stuff curling up. So I mean, I'll also keep an eye on this for you, and we'll chat about things that appear, and whether or not there's certain divergences showing up. But you do have some good buyers down below, and we'll see how it comes back down. But remember with Wyckoff too, Wyckoff is bigger candles, and then when they start to get smaller, shows that you're getting exhausted too. So there is a pretty decent sign that you at least have buyers that are clustering in this area. Right? So, all right.
Good stuff.
Happy to help. I will be trying to aim for Sunday will be the next day that we do. What I want to try to do is at least have one that reviews the week in terms of Wednesday, Thursday, Friday, what the end of the week looks like. And then we'll also have the Wednesday session so we can review what Monday and Tuesday, and sometimes what Wednesday looks like as well too. So that way we can split the day up into two to kind of get an update with you guys and help you guys set yourselves up for potential upcoming trades too. So.
Okay.
All right.
Thanks, Eric.
Cool. No problem. Good to see you. We'll chat again soon, and good luck with your trading, and happy trading in tomorrow and Friday.
Thanks. Bye.
See you soon. Later.